Hi, welcome to the third video. So in this video we'll talk about candlesticks. So a candlestick is a type of price chart and it is used in technical analysis that displays whereby a candlestick it will show you where is the highest point and where is the lowest point for that particular specific period, where is the open and close price of a currency pair for a specific period. So there are candlesticks in a 1 hour chart, there are candlesticks in a daily chart. So we'll talk about it in our next few videos, but in these lessons here, so we look at the candlestick itself. So as in the candlesticks, there are two types of candlesticks in the chart. So the left green color candlestick and the red color candlestick. So in the candlestick you will see that's a thicker part and also the upper and lower, there's a small wick over there. So the thicker part there, we call it the body of the candlesticks, okay, and the wick above and below, we call it a shadow. The shadow means that at that particular time period, so the price did actually went up to a point whereby after that it comes down back to a closing price and leave a shadow there. That's why we call it a shadow. That's a price that it has been there before, but it's not the actual real price. And okay, of course, the highest point and the lowest point is the highest price and lowest price for that particular candle. So if the candle is in H1, meaning that one candle it's showing you a price ups and down, the price action in that one particular hour. So if you're looking the candle in a H4 chart, H4 means that one candle it's equals to 4 hours. So when the candle shapes form, that means it will show you the price action, the price ups and down in that particular 4 hours. Then of course, and move on, there are daily charts, weekly charts, whereby in a daily chart, then one candle is equal to 1 day. So let's look at the left hand side, the green color candle. So green color candle, we call it a buy candle because this candle is showing you the price it's going up. Why we say that? Because a buy candle, it opens the price at the bottom of the body. And assuming this is a 1 hour chart, so 1 hour later when the price close above the open price, that means this will be a buy candle and it will appear in green color. So move on to the next on your right hand side, the red color candle. So meaning that when the price open at the above of the candle body and 1 hour later it closed below the open price. So meaning that the open price is higher than the closing price, meaning this hour price gone down. So that's why it will leave a red color candle. Okay, so just bear in mind where is the open price and where is the close price for either the buy candle on the left or the sell candle on the right. So in a candle, the size of the body, it makes a difference as well. So from left to right, the moment if you see the body is taken up about 70 or 80% or even 100% of the whole candle, which means this is a very strong, the buying strength, it's very strong. So if let's say this is a 1 hour candle, so it will tells you that in that particular 1 hour the buy strength is very strong. Okay, so the moment you move on to the right hand side, when you see the body are smaller, so of course the middle it's a 50-50, and the last two candles on the right hand side, as you can see, the shadow is taken more than 50% of the whole candle size, and the body is just stand about probably 20 or 30%, just less than 50%. So meaning that even though it's a green color candle, it's a buy candle, but the strength of the buy is weak. So the size of the body, it makes matter in your chart. Okay, so yeah, let's go the candlesticks lessons, and let's move on to next video. Hi, in this video we're going to talk about the trend. So what is the trend? It's actually a direction in which currency pair move over a specific period. So there are three trends that we can determine. One, if the trend is going upward, we call it a bullish trend. Downward, we call it a bearish trend. And there's are sometimes the trend doesn't go anywhere. So it's like just moving inside a zone where we call it a sideways. Also, we call it a ranging. So understand and identifying the trend, it's very crucial for Forex trader. So please bear in mind, as the trading in the direction of the trend can increase the chances of success. So when you know that it is a buy trend, so we only do buy trade in a bullish trend. And the other way around, if let's say you know that this is the bearish trend, and we'll be only focusing to trade, to do a sell trade in a bearish trend. And what about sideways? Usually during sideways, we don't recommend you to trade because that's no clear direction. You wouldn't know it will be going up next or it will be going down next. So don't trade during sideways. Let's go to the next slides. Okay, now you can see in the picture we are in the middle of the sea, and there's a big ship actually going towards your left hand side of your screen. So just imagine the big ship is actually the trend in the forex market. So, and we as a trader, we are just a very small rowing boat besides the big ship. So the question now is, can you row the boat against the ship direction? Is the ship are going towards the left hand side, and is it easy for us to row our small boat towards the right hand side? Yes, the answer is no, because when the big ship are going towards a direction, it will affect the sea, the water of the sea will be going at the left direction. So if we row the boat against the direction, it uses up a lot of energy. It will be take up a long period for us to move just a little bit forward. So that's why. But what if we row the boat accordingly, by following the ship direction, following the wave of the seas, it's much easier. Probably by just 1 or 2 row, and your boat will be moving forward in a very longer distance. So this is, remember, so every time when you do a trade, just to make sure that is my trade are now accordingly to the market trend. So bear in mind of this. Next one, let's see what is the bullish trend, the sideways, and the downtrend. So over here, let's talk about the bullish trend first. In the starting of a bullish trend, we actually need 3 waves to form a bullish direction. So how's the three waves go? Starting from here, the first wave to go up, and a strong wave going up, we call it an impulsive wave. So this is the first impulsive wave, go up to a point, it will continue with the second wave. The second wave is coming down back, and it is shorter than the impulsive wave. So usually this one we call it a corrective wave. And you can call it a retracement as well. It's in another word, retracement. So it's just like a temporary resting. If the price wanted to go further up, it needs times to rest for a while and continue the journey. So the moment you see now there's one wave, second wave, the corrective wave, and comes the third wave, also is an impulsive wave, and it breaks the previous HH. So HH over here, we call it a higher high, and the retracement on the downside, we call it a higher low price. So the third impulsive wave must be forming another new higher price over here, higher than the previous. Then this is what we call a three wave bullish wave. So this is where the bullish trend starting. So it's just like a lightning strike. So please remember, either it's a bullish or it's a bearish. So a starting of a trend, we need total of three wave to form it. Okay, now after forming the new higher high, if the bullish trend wanted to go up further, it will come another corrective wave by resting a while, forming a new higher low, and again it will break through the previous higher high and form the newest higher high on top of it. So if the bullish trend wanted to continue some more, it will have to rest a while and comes an impulsive wave, forming a new higher high. So if continuously the chart it's making a new higher high, a new higher low, again another new higher high, and that means this is a continuous bullish trend. So let's talk about the sideways. So in a sideways, where we can see the price are going ups and down in between the zone. So in this zone here, price is actually keep on up and down, moving inside the zone. So meaning that this is actually a consolidation sideways, whereby, as I said just now, it's not advisable to trade during sideways because there's no trend. You don't know whether the price will go up next or it will go down next. As we all don't know the direction, just don't trade. Next, let's look at the bearish trend. As I said just now, a starting of a trend, it needs three waves to start it. So from the highest point here, this is the first impulsive wave. And after that, it will have a resting time. So this is first, and the second wave is what we call the corrective wave. After making the corrective wave, so from here now we know that under a bearish trend, the lowest point is called LL, lower low, and the retracement point on the upper side, it's called LH, lower high. So after two waves come, then to confirm that the downtrend is there, we need the third wave. So this third wave coming down, breaking the previous lower low and forming the new lower low. So now this is the third wave. So we have 1, 2 and 3, the lightning shape. So now we have 3 waves here. So that's where your bearish trend started. So in order for the bearish trend to keep on continue, it has to keep on breaking the new lower low and forming the new lower low. And let's say it wants to go down more, so they will need a resting time and a corrective wave, making a new lower high and break the lower low and forming another new lower low. So that means if you see this kind of situation, that means the downtrend will be keep on going. Alright, so now when you determine what trend is it currently, so just trade accordingly to the trend. Okay, so continue to the next video and I'll talk about the candlesticks. Hi, welcome to Price Action FX. This is a Forex trading course specially made for all the beginners out there. Are you looking for extra income in Forex trading? And you think that Forex trading is a very difficult skill to learn, and probably there's a lot of Forex trading courses out there and it will cost you a lot of money. But you are in the right place today. In this Forex trading, it's all specially made for all the beginners. So in this course, you'll learn the terminology about all the Forex trading, and in this course, I will include 2 trading strategy where you can use it immediately to trade, and this strategy will definitely earn you some extra income monthly. So let's not waste some time and we go straight into the course. So in this course, the first that I wanted to tell is Forex trading. So what is Forex? So Forex is a foreign exchange in global marketplace where currencies of every country are traded. So, and it is the largest and most liquidity financial market in the world, and it is operating 24 hours a day and 5 days a week. So bear in mind, weekend, Saturday and Sunday, the market will be closed. So what I say 24 hours, so no matter which country are you from, so every different country, because of the time difference, so you can actually trade Forex exchange different country with a different time. So it is run the total of 24 hours a day. So in Forex trading, we know that in this world there are so many countries. If I'm not mistaken, it's about maybe 200 countries in the world, I'm not sure. But in Forex trading, we are only focused in 8 main countries. So in the slides, this is the 8 country currency that we are focusing on. So the first one is definitely the American dollar, USD, and we have UK pound sterling stands at GBP, the euro dollar, EUR, we have Swiss, we have Canada, Australia, New Zealand and Japan. So just remember the code, I mean the short form for each of the currency: USD, GBP, EUR, CHF. So memorize it. So with these 8 main currencies, okay, we need a country currency to compare with another country's currency, make it a pair so that we will have the fluctuation in the chart. So These are the 7 main currency pairs. So out of from the 8 main country, so every other country pair with the USD is these 7 main currency pair. So we have the pound sterling pair with the USD, we call it a GBP USD. So other than that, EUR USD, AUD USD, so all these, the remaining 7 countries pair with USD, so we call it the main. And besides the 7 mains, over here we have another 19 pairs which we call it a cross currency pair. So from the 8 country, besides the USD, the other 7 country, they pairing with each other. So make it this 19 pair. So 19 plus the 7 main pairs, we have actually total of 26 pairs that we can trade in the market. Why only these 8 main currency pairs? It's because the bank in the whole world, the investor, the capital company, everyone are focusing on these 8 main countries, so it has volume. So when it has volume, so when we trade, yeah, there's a lot of opportunity for you to earn extra income from here. So let's look at next, pips and point. So in our daily life, for weight we use gram and kilograms. So for liquid we use milliliter or liter, but in Forex trading we use the unit of pips and point. So 1 pip is equivalent to 10 points. So points is the one that we earn, and our profit depends on how much point that we earn from each trade. So how do you see about the point? So on the left hand side, as you all can see, there is a few pairs on the left hand side. So let's make it an example by USD and CHF. So 0.89108 is the price. So meaning that it's 1 USD, it's equivalent to 0.89 CHF, the Swiss dollar. Okay, so as a point, easy. Use the last 3 digits. That's the point. So another example, let's say for USD pairing with the JPY, the Japanese yen. So $1 USD is equivalent to 154.597 yen. So take the last 3 digits, 597 is the point, and if you to convert it into a pips, so it will be 59.7 pips. So how do we calculate our profit in each trade? So simple formula, the amount of lot size that you trade in times the total point you earn, and that is your profit. So let's see the first example on the left. So this is the GBP paired with the US dollar. So assuming if you are entering your trade at a lot size of 0.1 and you do a buy. When I say you trade buy, so meaning that you are entering a trade for the price to go up. So, and assuming the trade closed at 1.28964, from the place you enter your buy is 1.28464. So now the difference between your buy and the price that you close your trade, so that is the point that you earn. So over here, the point that you earn is actually 500 points. So how do you get the 500 points? By the last 3 digits, your trade closed at 28964. You take the last 3 digits, 964 minus, okay, less the price that you trade in your buy. So it's 28464. By 964 minus 464, then there where you get your profit earned at 500 points. So with the lot size 0.1 and you are earning 500 points, So that means your profit will be 50 US dollar. Let's look at the next example on the right. So this is US dollar paired with the Japanese yen. So same, your lot size is 0.1. Now this time you trade sell at 154.597. So it's a sell trade. You wanted the price to goes down. So the moment the price goes down and you close your trade at 154.097, so meaning that you earn a 500 points here as well. So how do you get these 500 points? Same. Get the last 3 digit, minus 8, 597 minus 97, so 500 points is your earning. So by the lot size of 0.1, so times 500, same, exactly, you are earning 50 USD over here. So this is how you calculate your profit. So next one, let's look at leverage and margin. So what is leverage? So it is a sort of convenience provided by the all trading platform. You see, when we trade Forex, we need to trade under a broker platform. There's a lot of broker in the market, so you can actually search in the Google and find out. Use a certified brokers. Okay, I know there's a broker so much out there. We want to choose an experienced a broker that is already operate for many years with experience and a good payout. So this is how you choose. And of course, when you go along the course, there's one video that I will teach you how you can choose the right brokers. So leverage. So this allows traders to use your capital more efficiently by controlling larger position with a lesser money. So why we say that? So if we are on a leverage 1-to-1, meaning that to buy in a 100,000 unit of USD, without a leverage, you need a minimum deposit of 100,000. Okay, but with the leverage provided by most of the brokers, they are 1-to-100, 1-to-500, and there's also 1-to-1000. Just as an example, if let's say you are using a leverage of 1-to-1000, meaning that same, you can also trade the total amount of 100,000 units of USD, but with just only $100. So this leverage conveniencing are provided by the brokers so that you can also trade in Forex market with the minimal deposit. So that means now everybody can trade in Forex, and thanks to all these trading platforms. And what about margin? Margin is the amount of money required to open and maintain the leverage position. So it is essentially a deposit that acts as a guarantee for a leverage position. So meaning that with the leverage 1-to-1000, you can open a trading account with just a minimum of 100 USD, and you can start trade with 100 US dollar. Okay, so now let's look at the next. Stop loss and take profit. So in short form, we call it a stop loss is in SL and take profit as a TP. Welcome to this video. This is the video that I'm pretty sure you all been waiting for it. The breakout strategy. This will make you the profitable trade. Okay, this strategy is where you can make your profit by looking for a breakout of your support resistance, and also together with the signal from your moving average and MACD. So follow the steps one by one. So to do a buy trade, the first thing you need to look is for a candle to break out your resistance. The moment you see a green candle shooting up, break out your resistance, and next by referring to that particular candle for the MA20 and MA50. So this time the moving average must be parallel, giving a signal same as the going up direction, whereby MA20 must be above MA50. So if this is a confirmation that MA20 is above MA50, then the next thing you see is the MACD for that particular candle. So in MACD, it must show you a strong buy signal. So after showing the strong buy signal, then this is where you can enter a buy trade upon the breakout candle closing. So this strategy is only used in H1 chart. So just by looking for 1 hour chart, 1 hour there's a candle breakout, MA2050 is good, MACD is good, showing strong buy, then you can enter a buy. So after enter a buy trade, whenever you enter a trade, so remember to set your SL and TP. I'll show you how you do it. So on the other side, to do a sell trade, first you must look for a candle that break out your support, because support is at the bottom, so you need a red color candle to pass through it, break out the support. And next, for that particular candle, so refer its MA and 20 and MA50. So this time, if it's a sell, so your MA must be below MA50. If let's say the requirement is good, okay, then go to step number 3, refer the MACD for that candle. So this time MACD must show a strong sell, then only you can enter your sell trade upon the breakout candle closing. So let's say when you see the candle, it's already breaking your support line, but the time it's still in the middle of the candle, is still moving. Let's say this is the candle from 2 p.m. to 3 p.m. But when you see this candle, it's maybe 2:45 p.m. So meaning that the candle is not complete yet, it's not closed yet. So you must wait until the candle close at 3 p.m. to make sure it is a breakout. Then only you see the MA20, 20 and 50 and look at the MACD. If everything is good, enter the sell trade with set up your SL and TP. Alright, let's go to some example. So before that, how do you set your SL and TP? So in a buy trade, we always set our stop loss below the price we enter our trade. So set at previous low, a 50 point below, and the take profit TP you set at the next potential resistance. As we all know, once the candle break out a resistance, it will go to the next resistance. So next resistance is your target for TP. So same goes to sell trade. When there's a candle break down your support, so TP you will be set on the next potential support. As we all say, after a support, there will be another support. After breaking to a support, there will be another support. So same, in a sell trade, you set your stop loss above your trade price. So we set as previous high. So next we look at the example. So what is your previous low and what is your previous high? Okay, so this is an example for a buy trade. So remember, step number 1, look for a breakout candle first. So for a buy trade, we need to see a candle break out the resistance. So this green color candle here is the candle that break out the resistance. The resistance is at this level. So the body of the candle already break out. But sometimes, as we all spoken on the previous course about the candle, we need a very good body candle, which is the strong buy candle, whereby the body taken up more than 80% of the whole candle. If you saw a breakout with a very small, okay, let me change to another color. If you saw a candle, the body is just small and you have a long shadow, we don't consider this as a breakout because the candle is not strong. Okay, the body is just about 20 or 30% of the whole candle, so don't trade at this moment. So we need a very healthy strong candle, just like in the example. Okay, so after you saw a good candle breaking out your resistance, so next look at the MA 2050 for this candle. So over here, what we can see for this candle, the MA 20 is above and the MA 50 is actually below. So it's met the requirement, because as we know, when MA 20 is above MA 50, that means it's a up direction. So it matched the breakout candle which is going up. So step number 2, after referring your MA 20 and 50, so next we will refer the MACD for this candle as well. So for this candle, the MACD is this one. So over here we see the MACD is showing us strong buy because the straight line is above the level 0, so it's in the buy zone, and the red color moving average line, it's overlap on top of the straight line, so it's overlapping. So remember, when it is overlapping, it is a strong buy signal. So now we have the first confirmation, which is the breakout of the resistance. The second confirmation, it's from the MA 20 and 50, so it's also show us the up direction. And the third confirmation is the MACD, whereby it shows us strong buy. So now we have 3 confirmation also telling us that the price will be going up. So this is where you enter your trade. So as I said just now, you enter the trade at the price, the closing of the breakout candle. So the price closed at this level here. So this is the place there where you put in your buy. So when you put in your buy trade, so where is your stop loss? So from here, you can see the wave. So by looking at the wave, we know that the wave is actually an up and coming down. And over here, it goes up again, it comes down to this lower part and shoot up, breaking your resistance. So your previous low is actually from your trading point, where is the previous low price. So here is your previous low price. This is the previous and this is the previous low. So we set our SL only in our previous low, which is over here, this point here. Buy, remember I told you, stop loss set at previous low but 50 point below. So when you set your SL, don't set exactly at the lowest point here. Over here, don't set your SL here, it's wrong. So from this lowest point, move down about 50 points and set your SL. So for TP, above this resistance, there are another potential resistance above it. So find where is the potential resistance by looking back at the previous chart. if you can't find any potential resistance in your previous chart, is okay. So you will know from this resistance where is the support line below. So usually the distance between a support and resistance is about similar. So if let's say from this resistance to the support line below, it's about, let's say, 500 points. So your potential resistance after the breakout will be another 500 point above. So it will be around 500 point more or less. So find out the resistance over here, and remember, don't set at exactly at the resistance line. Let's look at the previous slides. Take profit, set at next potential resistance and also 50 point below. So when you found your resistance at this point level, so just set your TP just right 50 point below the resistance, then that's your TP. Alright, so let's go to the next example where we can do a sell trade. So over here, accordingly to the process, the step by steps, first what we need is actually a breakout candle. So over here we have a very nice candle with a full body candle going through the support line. So it passed through, that means there's a breakout occurs. So the moment the candles break out, we refer to its MA 20 and 50, which is the moving average 20, it's below, the moving average 50, it's above. So when MA 20 is below the 50, it means it's telling you it's a going down direction. And the breakout of support is also a going down direction. So we have first confirmation here, we have a second confirmation here, and now we need the third confirmation where we refer the MACD of this candle. So by looking at the MACD here, the straight line is actually occurs below the zero. So that means it's in a sell zone. And the red color, it's overlapping the straight line. So when it's overlapping, it shows strong sell. So when it is showing your strong sell, that means your third confirmation is there. So now you can enter a sell trade upon the breakout candle closing. So as I said just now, the candle closed every 1 hour. So just wait for this breakout candle to close after an hour. So enter your sell trade at the price closing at this level. So you enter your trade over here. And how do we set our SL? So for a sell trade, remember, for a sell trade, we set our stop loss as in previous high 50 points above. So back to the chart, we can see a wave coming down from here, coming down, reaching the support. It didn't break through, then it goes up to the highest point here, and afterwards it comes down up a little bit and comes down all the way and break through the support. So where is your previous high? Yes, over here. This is your previous high, and move a little bit 50 points above, and there goes your SL. And where is your TP? For a sell trade, it already breaks a support line, so the price will go to the next support. So where is your potential support? Same. You can't see the candles over here because it hasn't happened, so you wouldn't know where is the support. So just by looking at the previous chart to find out the next support potential support line and set your TP. Same, don't put exactly at the support line, just move 50 points above. There goes your TP point. Okay, so for conclusion, for this strategy, we need a few confirmation so that you can enter a trade. So let's go back to the step by steps. So to make a buy, first you need a candle to break resistance. Breaking resistance, that means the price is actually going up. So you have a going up first confirmation because it's a breakout. Second, you have the MA20 above 50, so also a going up sign. And in MACD you have a strong buy, also a going up sign. So here you can do buy. So on the other way, to sell it, we need a candle going down, breaking your support. So it's the first confirmation. Secondly, by looking at the MA20, it's below MA50, so also a going down sign. And third, you have the MACD telling you strong sell, also a going down sign. So you have three confirmation that telling you that the price will go down, and that's where you enter your trade. Got it? So after this video, you can try with your demo account, where there's a video that I made for you in this course is how you can register a demo account in MetaTrader 4 so that you can start practicing by using your demo account. So after practicing, learning from the mistakes, and slowly you will get the strategy right. The moment you get the strategy right, you have the confidence, then only it is suggestible that you go for a real account and trade with your real money and start making profit. Alright, great. So let's move on to the next video. Hi, welcome to this video. So in this video, we are going to learn about the second indicator. It's called the MACD. So it's sort of a little bit similar to the moving average, but this time this is called the moving average convergence and divergence. So in short, it's MACD. So this is a very popular technical indicator used by traders to identify the strength, the direction, the momentum, and the duration of the trend. So just now we have the moving average 20 and 50 are telling us the direction, and this time we will have MACD to tell us about the strength. Okay, let's move on. So this is the steps by steps. So to add in a MACD in your chart. So same, this is for the Windows version of MetaTrader 4, where you can find on your menu bar, click the view, go to your navigator. So inside your navigator, just now we find your moving average inside the trend folder, but this time you go into the oscillators folder and you can find MACD inside. So click on the MACD, it will pops up the MACD settings. So over here, don't change anything, we use the default setting, just press OK and you will have your MACD appear in your chart. So the MACD will appear underneath of every chart. So inside MACD, as you can see, there's actually a middle level in between. It will be stated 0.00. So when the chart is above the 0, this is what we call a buy strength zone. It's a buying zone. and whatever it appeared below the 0.00 is the sell zone. So over here you will see each candle are actually equals to a line. Each candle appeared in every line. So the gray color straight line is actually showing that the volume of that particular hour. And the red color chart, the red color line is actually just like your moving average price. So over here in MACD, what you need to know is two things. One is this one. When you see the gray color line and the red color line is actually crossing it. So like what I'm circling over here, you see the red color is actually overlapping with the straight line. So when you see this overlapping and it is above 0, it is called strong buy. And on the other side, if it is appeared below 0.00 and the red and the straight line, it's overlapping like this one, and we call it a strong sell. So we will only trade if the chart are showing a strong buy or strong sell. Other than that, don't trade at all. Okay, so let's see some example over here. Okay, next one. What is convergence and divergence? So convergence and divergence, it's actually the indicator refer to a relationship between the MACD line and the price action of the underlying currency pair. Okay, these concepts are essentially understanding the potential of reversal. So MACD is just not only tell us the strength of the buy or the sell, it also will tell us when the price is going to be reversed. So they are both convergence and divergence. When MACD show convergence, okay, it means that the MACD signal and your price chart is actually parallel in the same direction. That means the price is going up or going down with a good strength. But if a divergent, meaning that the MACD are showing a line which is diverse with your actual chart above, then it will tell you that the trend might be changing, might reverse. So I'll show you some example over here. You might not understand from the wording here, and let's look at the difference. So over here, when you see the chart is actually going up, okay, and at the same time MACD is also showing you going up. So when it's both on the same direction, that means the buy is still continuing. So the other way around, when you see the price is keep dropping, this is where I explained previously about the trend. When you have a lower low here, when it breaks this lower low and form another new lower low, so price is coming down. And if let's say at the same time your MACD is also showing price are down, so meaning that this downtrend is continuing. So on the other way around, for divergence in MACD, it's different. So over here, we see the price actually keeps on going up by forming another new higher high, but your MACD is actually showing you a down. Okay, so this also tells us that the strength from this strength is coming down to this strength. So the strength is actually weakening. But what appears on the chart is actually still a going up. So this is the divergence. When you see this divergence, the price is going to be reversed. Same goes to, this is a sell trend previously, and then you just have to join up the lower low and you will get the downtrend line. But in the MACD, the previous lower low, the strength is this big, but after that this lower low only shows the strength is this small. So that means over here you'll get a divergence line in the MACD. So now meaning that price, it's the downtrend is weakening, and next what will happen, the price might reverse. So this is a message that a MACD will tell you whether the price will reverse or keep going accordingly to the trend. So next is the video that I'm going to tell you the strategy, a combination by using your support resistance, your moving average, the MA20 and 50, plus together with MACD. By these three things, combine it together, use it together, and from there we can find a very good entry point to put in your trade. So let's move on to the next video. Hi, welcome back. So I hope you enjoying the previous few videos, and congratulations, and you are now in this video. We'll talk about the indicators. As previously I told you that we need to find out a support resistance in a chart, and by the help of some indicators you will find a chance to trade a profitable trade. So but before we move on, that's a reminder that if you have any questions about the course and you would like to ask, you can always message me in the inbox and I will answer accordingly. Now let's move on to moving average. So moving average is actually an indicator that most commonly used inside our technical analysis, whereby it helps trader to smooth out price data over a specific period, making it easier for us to identify the direction of the trend. I repeat, moving average gives us an indication, tell us that what is the direction of the trend right now. Remember, we have spoken about it. We want to trade accordingly to the direction, and here's the moving average will help us. Okay, so in moving average, there are some for short-term use and some are for long-term use. So for short-term use, there are 10, 20 or even 50 in periods are often used in day trading. Day trading meaning that today you enter your trade, so the maximum it will last you about 2 to 3 days or even intraday, within a day, the price will reaching your target. So if for long-term usage, usually traders will be using a higher time period, which is 100 or 200 moving average for a long-term trend. So I'm pretty sure now in your mind is like, come on, what is 20, what is 50, and what is 100? Now let's move on to the next slides. So when you put in a moving average into your chart, and you see that's through a red line and a blue color line in your chart. So when we talk about moving average 20, meaning that the system will calculate by itself. As an example, we look at the green color chart here. So the moving average 20 is placed over here. So how do it get the point at there? So it's by calculating the last 20 candles before the candles on the average moving price. So by calculate the last 20 candles, and they found that the average price is over here. So each candle taking the last 20 candle. So that's mean for this candle, the last 20 candles average price is here, the last 20 is here, last 20 is here, and last 20 is here. So when you join up every of the average price, and this red color chart will appear. So same goes to the moving average 50, whereby not just 20 candles. Now this time it will calculate the last 50 candles of every candles before, the last 50 candles before, and same, they'll find out the last 50 candles, the average price is here, 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 here. So when you join up all these average price, and it will form a blue color line in your chart. So what is the purpose that you have a moving average 20 and 50 in this chart? Let's move on. So in your MT4, in your trading platform, you can always set up your moving average into your chart. So this is an example whereby you are using the MT4, the Windows version. So you can always find in your above menu bar, that's a view. Click in and look for navigator. So the moment you click on navigator, it will pop up a box of navigator, and inside the navigator, under the indicator, there's a trend folder. Double click your trend folder and you will find moving average in it. So double click moving average and it will pop up another box in front of your screen, and over here set your moving average. Just now we have two moving average. So first put in the period as 50 to calculate the previous 50 candles, and you can always edit on the color. So choose your preferred color and press OK. So the blue color line will appear in your chart, and repeat the same process, and this time fill in the periods with 20 and change the color into a red and press OK. Then you will have another line, a red color line, which is, we call it the moving average 20 in your chart. So let's move on to the next one. So the purpose of MA 20 and 50, as we said previously, 20 and 50 it's commonly used in a short-term period. So it's a very suitable MA to use in 1 hour chart. So in 1 hour chart, when you have both lines 20 and 50 in your chart, so it's easy. Every time when you see both lines cross, it means the trend is changing. So every time during a downtrend, you will see MA 20 is actually below the MA 50. So when it comes to a lowest point, when you see a crossing, then it will tell you the trend might change. So the moment it goes back to the uptrend, and this time you will see MA 20 is actually above the MA 50. So by looking at this moving average line, we can know that what is the direction for current trend, and this is where it tells you you need to do a sell or you need to do a buy. Okay, but with the support and resistance, with moving average, it is still not sufficient information for you to enter a trade. Let's go to the next video. I will teach you another indicator that helps you in your trading, and we'll go into the strategy that immediately after learning it you can start trade and do some profit for you. Let's meet in the next video. This is the fourth topic in the course. So in this video we'll learn about support and resistance. So support and resistance are the fundamental concepts in technical analysis used by traders to identify key levels on the price chart, where the currency pairs tends to reverse or pause in its movement. So understanding this level helps traders make decisions about your exit and entry points, and they are often used in conjunction with other technical indicators and chart pattern. So by learning how to determine where is the support and resistance, together with the help of some indicators, that is where you can find a chance to enter a profitable trades. So how do you find it? Let's see. So when a price is going up, remember when the previous video, as I told you, in the uptrend we will have a higher high and a higher low. So comes with the third wave forming the new higher high, whereby the price already break out the previous higher high. This is where a buy trend starts. So usually a place in higher high is a resistance, whereby sometimes when the price reaching this price, it will stop or reverse. Like over here, the first impulsive wave, when it's reaching the resistance, it will bounce back. So this is how we determine where is the support or resistance. So in a chart, you can always find a price level that when every time the price reaching that level, there are some effects over there. It's either block it, rebounds, or it breaks through. So in the chart, when you see a price already up to your resistance here, if it's never go through, it will bounce back. It will bounce to a level where there is a support, whereby over here you see there's twice when price reaching at this point, it didn't break down. It stops over there and rebounds back. So these are all the key levels that you can determine is your support or resistance. So like over here, as you can see, when the price break your resistance, and it will go all the way to the next resistance. If it cannot pass through this resistance, it probably will bounce back to a support, where previously this price level, before this, it's a resistance, and after it being breakthrough, it will become your support. So in the chart, just find a price level that you see every time the price when reaching at a certain point, it has an effect of support or a resistance, and these are all the key levels here. So with the help of support and resistance, we can always find a chance to trade. Like if example over here we can see previously the price when reaching this resistance, it bounced back, but after it breaks through this resistance, the price somehow sooner or later it will reach the next resistance. So along this whole uptrend here, this is the place where we can find our profit over here. Okay, so refer back to your chart and you will always find where there's a price always stuck at that level, and there will be a price, there will be a resistance or a support over there. Okay, I've given you an example. Let's see on the next slides. This is what I'm talking about like just now. So resistance or support, it appears usually in a buy trend, it will appear in your higher high level. If it's a downtrend, support is always at the lower low level. And when it is a consolidation, the price will always move in between your resistance and support, and this is where we don't want to make any trade over here. Okay, let's see on the next slide. I've given you an example from the real chart. So as you all can see here, this is actually an obvious downtrend. So and at this downtrend here, what we can see, the price starting and the above, it comes down all the way and bounce back, and it comes down, bounce back. These are what you can see. It's actually your lower high, lower low, lower low, lower high, and a lower low over here. So it's a downtrend during this time of period. Alright, it's a downtrend over here. So then after that, these are the main key levels that the price didn't break through, and afterwards the price went up again and break through your previous lower low. So this is your resistance over here. Once it breaks through this resistance, it will come up to the next resistance. Okay, same goes to others example here. As you can see over here, the price, it's already break the support. So the moment it breaks the support, it will come down to the next support. So over here, when it breaks another support, it will come to another support. So you have unlimited resistance and another resistance and another above, and also the other way, you have a support. Always you have a support under the chart. Once it breaks through a support, it will go to another support. Once it breaks through another support, and there will be another support below. Okay, so by looking at the chart over here, this is the place where we can find your support resistance. Just look for a price level that it happens twice or more than that, whereby when the price reaching that level, it gives some effect. Like here, one time it comes back to this resistance, it stops and bounce, and the second time it comes to this level, also resistance, and it doesn't break through and bounce back. So meaning that here we have a very important price level. Same goes to others, like over here, previously it is a support over here, but the moment there's one day it breaks through this support over here, and it will become a resistance after that. Okay, so practice more in your chart, find out where is your support and resistance, and it will help you to enter a profitable trade. When you continue in this course, as I promised, I'll give you a 2 strategy that you can make profit out of it. So by the help of the support resistance that you can find in a chart. Alright, so let's go to the next video. Hi, welcome back. So this is the second strategy that I promised you in the earlier of this course. So this is called the scalping strategy, and this strategy it's only used in the M15 chart. So that's where every candle are showing you a period of 15 minutes. So for scalping strategy, you need a few strategy whereby sometimes you can't find any chances in the breakout strategy for some trading opportunities. Then you can always come to 50 minutes chart to look for a scalping opportunity. So scalping meaning this is a very short term trade. Okay, price are moving very fast. So under the scalping strategy, it's a lesser profit, but it's a very fast trade. So every trade that you enter, you might taking your profit in the next half an hour, 50 minutes, or just less than 1 hour. Unlike the breakout strategy, the moment you enter a trade, it could be used up probably 1 day, 2 or maximum 3 days to get to your TP point. But for scalping strategy, it's a very short time of period, but it's a very easy strategy to use. So what you need to do is just combine the RSI indicator and the stochastic oscillator indicator in your 50 minutes chart. So what you do is when there's a candle ends, and you will see the RSI is actually showing you overbought. That means in your RSI, this is your level 75. You see your RSI, the blue color line is already goes into the overbought zone. And at the same time, in your stochastic, you have a level of 80. And you saw these two, the green and the red line, it's already goes into the overbuy zone. So both, when you see like when the candles happen, you see RSI showing you overbought and stochastic, make sure both green color and red color line also already go into the overbought zone. Okay, so when both are showing overbought and overbought, then the next thing you do is do a sell trade. Of course, on vice versa, when you saw both RSI are into the oversold zone and stochastic also both green color and red color candle already go inside the oversold zone, and this is where you do a buy trade. So both RSI and stochastic must be matched at the same time. So if let's say today you saw a candle appear, the RSI doesn't show overbought or oversold, it's still moving in between 25 and 75, but stochastic already showing you overbought or oversold. So at this time, don't trade. We must both RSI and stochastic are hitting at the same zone, only you can do your trade. So please take note that all your entry point must be at the closing price of the overbought or oversold candle. I'll show you an example where is the precise entry point. So the moment you miss the entry point, you will miss the chance and don't trade anymore. Just wait for the next opportunity. Okay, so for this strategy, it's very simple. Your SL and your TP will be set at 100 points only, meaning that if today I'm doing a buy trades over here, so your TP is just 100 points over here, and your SL will be also same 100 points below your entry point. So let's go to the next slide on some example. So this is the opportunity that you can do a buy trade. So let's look at this candle. The red color candle appeared. So be in mind, this is M15. So it's a 15 minutes chart. So every candle is actually showing you the price moving for each 15 minutes. So it's like from 1 p.m. to 1:15, 1:15 to 1:30, and 1:30 to 1:45, and the next candle will be 1:45 to 2 p.m. So from here, as we can see, this candle, the red color candles, when it ends the 15 minutes and you see the RSI point, it's already inside the oversold zone, and same like your stochastic, also both red and green candle is inside the oversold zone. So from here, after both are in the oversold zone, remember when it is oversold and oversold, you do a buy. So where do you put in your buy trade? The moment the candles ends at the closing price, so the closing price of the candle will be here. So enter your trades here. If let's say you miss out this candle, the moment you see the price is already gone up to here, so don't buy. You just miss the chance and just wait for others opportunity. Okay, so you enter your buy at the closing price of this candle. So you enter your buy here, your 100 point SL, and set up with 100 point of TP. So over here, after you enter your trade, as we all can see here, we have 4 green candles. 1, 2, 3, 4. The 4th candle, it hits your TP. So each candle is 15 minutes. So meaning that these trades, the moment you enter, an hour later, just 1 hour, it hits your TP. And there you go, you got your profit. So let's see on the next example. So for this example here, same. When you found a candle where when it's end, it's 15 minutes and the RSI stops at overbought zone, inside overbought zone, and same, the stochastic oscillator, also both green and red color moving average line, also inside overbought zone. So now you have overbought and overbought. What did you do? So refer here, when you have overbought and overbought, you do a sell. So where do I put my sell? So wait for the candle to complete. Each candle are 50 minutes, I repeat. So this green candle will close at this point here. So immediately you see it's overbought and overbought, then you enter your sell trade. So after entering the trade, 100 point for your SL and also 100 point of TP. But in this situation, it takes a much longer time to hit your TP. It's after 1, 2, 3, 4 candles is 1 hour, another 4 candles is an hour, another 4 candles is another 1 hour, so it's about 3.5. Okay, it's 3 hours 30 minutes, it hits your TP. Okay, so as I said just now, when your RSI is moving in between 75 and 25, don't do any trade. So there's no trade here. You only find chance when the RSI comes to an overbought zone or the oversold zone. Got it? So this is a much simpler strategy compared to the breakout strategy, but this is a very fast strategy. That's why we call it a scalping. So in scalping in Forex trading, it means a fast trade. That means when you enter with a small profit, take the profit and go. It's like a fast game, you know. So I hope you can try this strategy in your demo account as well. Once you got the strategies right, you are making profit in your demo account, then only is suggestible you go for a real account and start trading with your real money. Alright, so yes, this is the 10th topic in this course. We have 3 more topics to go, and next you will be learn about money management and risk management. See you in the next video. Hi, in this video we are going to learn about another indicator that helps you to do a profitable trade. So this is called the stochastic oscillator. So this is an indicator, is a momentum indicator. So also used in your technical analysis, and this time this indicator is also just a similar like the RSI. It also shows you the potential turning point by indicator whether the market is overbought or oversold. So the objective of this indicator is much similar, just like the RSI. So over here, let's see. So same thing, it will appear below your chart, whereby it also has a overbought zone and a oversold zone. But for stochastic oscillator, we are using oversold zone from 0 to 20, none like the RSI. The RSI is 0 to 25, right? So over here it's 0 to 20, and the above zone, it's 80 to 100 will be the overbought zone. And something different on this stochastic oscillator is like you can see there are 2 lines, the green and the red, along the whole indicator. So these 2 lines is just like your moving average. So the moment every time when it cross, it will change direction. Over here, when it is crossed, then there's a potential of reversal, and this cross also happen in the oversold zone. So that means upcoming, the direction will be going up. So same, if let's say today both green and red color line reaching inside the zone or the overbought zone over here and doing a cross, that means upcoming the price will be potentially coming down. So same like the moving average, when you see the green color it's above, over here it's a uptrend. When you see the green color is actually below the red, it's actually telling you a down direction. Okay, so let's move on to the next slide. How do you set up? So same, it will fall under the oscillators folder, and you can find a name called stochastic oscillator. So in the setting, follow my settings here. In your K period, put it 16, D period 6, and slowing 6. So it's a 16, 6, 6 setup, and the level is as default 20 and 80. So one is done, click OK, there you go, you have this indicator in your chart. Alright, so after learning about the RSI indicator and this stochastic oscillator indicator, now this is the time you've been waiting for. Right away, let's go to the next video. The next video, I'm going to teach you the second strategy in this course where you can still make extra potential income. Let's move on. Hi, wow. Doing pretty fast. Now you are at the 8th lesson of this course. So in this course, I'm going to share with you another indicator that can help in your trading. So in this video, this indicator is about RSI. So next video, you'll be learn another indicator whereby after that you use it for another strategy. So let's talk about the RSI. In long, it's called Relative Strength Index. So this is also a very popular momentum oscillator used in technical analysis. So what's the purpose? So it's to measure the speed and change of the price movement in a currency pair. So this is developed by J. Wallace Wilder. The RSI helps traders identify overbought and oversold conditions in the market to let us know it is time for a potential reversal. So as we all know, let's say as an example, any product in the market, alright, any product in the market when people start buying it. So people buy and this product will become more expensive, much more expensive until a point where people think that this product is already overpriced. So that means it's already overbought. The moment people think that the product is overbought, people will stop buying it. So when a product, people stop buying it, and that's where the product price will turn down because no one is buying it anymore. So this indicator is showing us where a currency pair it already goes up to a level that it is already overbought, and the next thing will happen, it will be a potential reversal, and that's where we can enter our trade to make profit. So how the RSI looks like? So it just looks like your MACD. It's appeared below your chart, whereby in the indicator you have two levels. So from here, from the bottom, we have 0 to 25, where we call it a oversold area, and above, in between 75 and 100, it's actually an overbought area. So what we want to see is when the price coming down broke into the oversold area, and that is where the potential reversal will happen. Okay, same goes if let's say the price going up, break through above and goes into the 75 to 100 zone, the overbought zone, then the next thing happen, we wanted to look for a reversal coming back down, because when it's reaching this zone, the product is already overbought. Same goes to the below. When it comes to the bottom oversold zone, that means the price, the product, it's already oversold. So when the product is oversold, that means people will think that this product is already cheap enough, and that's a time people will start buying it. When everyone are buying the same product, that's where the price will shoot up. Okay, so how do you set up an RSI in your indicator? So just same like how you set your moving average and MACD. So same, go to the view, open up your navigator. So RSI will be appeared under the oscillators folder. So in RSI, there are some setup that you need to follow. So in the period, set up at 14, and on the level, as a default, it will be 20 and 80. So just edit it, make it 25 and 75, then you are good to go. just press OK and the RSI will appear at the bottom of your chart. Alright, so that's about it. Let's go to the next video. We learn on the next indicator. Hi, welcome back. And here goes, this is the last chapter of this course. It's about risk management. So unlike the money management, in risk management, it involves a strategies and practices designed to minimize potential losses and protect your trading capital while maximize your potential gains. That means this is like how much you are risking to earn an amount of profit. So meaning that, okay, given the high volatility and leverage available in the Forex market, effective risk management is essential for long-term success. So here's the question. You may answer for yourself. So the question is, if today, I will introduce you a new business, whereby when I'm telling you that this business, if you lost at this business, you lost 1,000. But if you success in this business, you will earn 500 only. Would you go into that business? Yes, you won't, right? Because if I lost, I will lose 1,000. But if I gain, I'm only gain 500. Yes, this is what we do in our Forex trading as well. If today, by looking at your risk and reward ratio, so just now, the business example, that the question that I asked you just now. So you are risking actually 1,000 to a ratio of your reward by just 500. So got it? So risk is actually referred to the potential loss on the trade and typically defined by the distance between the entry price and your stop loss level. So this is the risk. So by inside money management, you are risking the $50. And what about rewards? It's actually referred to the distance from your entry point to your TP, and that is your reward. So in Forex trading, the minimum requirement, got it? Remember this minimum requirement that you need to enter on every trade is by 1-to-1 ratio. So meaning that you are risking $1 to a potential of making a profit of $1 as well. So this consider a neutral trade, but it requires a high win rate to be profitable over time. Because let's say just now, out of the 20 chances that you have in $1,000 capital, let's say you win 10 and you lost 10. So it comes to a neutral because every of your trade are using 1-to-1 ratio. So but then it's not a bad news, because when you have a 50% winning rate and a 50% losing rate, it still comes to a nature because you are holding on the 1-to-1 ratio. But imagine if you are holding a 1 to a 0.5 ratio, meaning that if you are risking a $1 on the losing part and only making 50 cents in your profit part. So even though you have a neutral winning rate, 50% win and 50% loss, at the end of the day, you are still making losses because your ratio risk is bigger, your risk is greater than your reward. So of course, 1-to-1 is the minimum requirement. Best is you can make a 1-to-2 or 1-to-3 ratio. But then 1-to-2 and 1-to-3 ratio are usually for some kind of advanced or intermediate strategy that you might learn in the future. So for breakout strategy and the scalping strategy in this course that I taught you previously, it's always based on 1-to-1 ratio. Okay, so let's go to see some calculation profit. Okay, from the left, if today you are risking $1 to your reward is only 0.5, meaning that if I win only 25. If I lost on that trade, I will lose 50. So even though I have a higher winning rate by 6 to 4 losing, at the end of the day, overall I was still making a loss of $50. You got what I mean? Because your reward is just, your winning is just $25 per trade and you win 6 over here. So by 25 times 6, your winning is total of 150. But each time you lost $50. Even though you have only 4 losses, but the total loss is actually 200. So 200 losses and 150 profit, overall you are still making a loss. So the second one, by 1-to-1 risk and reward ratio, even though if let's say you win 5 and lost 5, you are still doing neutral, no win no loss here, so it's still okay as long as it's not a loss, right? So, and look at the third and the fourth. If let's say by a higher reward ratio, 1-to-2, if I lost 50, but if I win 100. So even though over here, if I'm making 6 losses and only 4 wins, in overall, I'm still winning. And same goes to 1-to-3 risk reward ratio. I lost 7 and I only win 3, but overall, I still win. So risk management making an important part in your Forex trading. So make sure after you finish the whole course here, start doing your trading by the 2 strategy that I taught you previously in this course. So making sure all your trades are accordingly to 1-to-1 risk reward ratio. Making sure that, alright? So when you comes to the real account, and remember to calculate based on the money management that I taught you, the 5% of your capital is a risk, it's a loss that you can take per trade. Alright, so I would like to congratulate you for finishing up this course here. So if you would like to learn more about Forex trading, yeah, keep on following my Udemy, keep on following my page. Okay, so I will keep on making video on intermediate course, advanced course, much higher skills that you can learn to improve your Forex trading skills and also improve your income, improve your profit, so that maybe one day you can be a professional trader. Yeah, I'm looking forward, I'm very proud to looking forward on it. So remember, if you have any questions about after learning this course, you have any questions that you would like to ask from time to time, you can always inbox me. So I will check my message from time to time and I will answer accordingly, because my purpose, I want you to be profitable after learning my course. I want everybody has a profitable Forex trading journey. So see ya. We'll meet in our next video. Thank you very much for signing up. Thank you so much. Hi, welcome back. So for this topic, we'll talk about money management. So money management in Forex trading, we are referring to a strategy or a technique that as a trader you use to manage your capital, to control the risk and protect your account from significant losses. So an effective money management is crucial for a long-term success in Forex market, because Forex trading is not gambling where you are gambling it, you are guessing it, the market to go up, or you guess for the market to go down. It's not a gambling game. So an effective money management, it's a crucial for long-term success in forex market, and it helps trader to preserve your capital during a losing streak and maximize the gain during your winning streak. Because in forex trading, we always say there's no 100% strategy. Okay, so even though now you are learning the beginning of a forex trading by the strategy that I taught you on the previous video, somehow the strategy will not be 100% strategy. There's no 100% strategy in the market. So that's why money management and also risk management I will taught you on the next video. These both things are a very important part in your forex trading journey. Okay, so what is money management? So money management is actually about how much is your capital versus and how big is the risk that you can take with a specific capital. So usually the basic risk that we can accept is actually 5% of your capital. For example, you have a capital of 1,000 US dollar. So the risk you can take is actually 5% per trade. So meaning that 5% of 1,000 is actually $50 on each trade. So if you are holding up on a 5%, meaning that with a $1,000 capital, each trade you are accepting a $50 risk for your SL. So you actually have 20 chance by using 1,000 capital. So 1,000 capital, you have 20 chance. So now with this 20 chance is by using which strategy are you using to make this 20 chance and getting more than 50% of the chance are winning. And of course you want a losing of less than 50%. So if out of 20 chance you can have probably 15 trades are winning and there are 5 trades are losing, then overall you are actually on the profitable side. So what is the suitable size, lot size then? So by risking $50 for each trade, meaning that you need to measure how big is your SL. Okay, because every trade, for example in breakout strategy, every of your trade you have a different SL level. Because why? In breakout strategy, our SL is always, remember this, is always on your previous high or previous low. Okay, you cannot simply put your SL just as what you like. Okay, SL there is a way. So SL only putting on previous high or previous low, but in every trade your previous high and previous low are different. So before you enter your trade, measure your SL first. Okay, for example number 1, assuming that today you have all the breakouts, your MA 2050 and MACD are all in a good confirmation, are telling you that you can buy. So you measure your SL to the previous low and you find that your SL is actually 500 points. So by you know that you can only risk $50 per trade. So meaning that $50, you divided your SL 500 point. So for this trade, you must putting in a lot size of 0.1. So as another example, same, this time, yes, I have the breakout strategy. I have the 3 total confirmation that telling me yes, I can sell now. But if I do a sell now, my stop loss is actually at the previous high. So I will measure the previous high and I will get that my stop loss will be 800 point. So because you only have 1,000 of capital, you can only afford to lose $50 per trade. So but this time the SL is 800. So same, your risk 5% $50 divided for this trade, your SL is 800 point, divided it and you get numbers of 0.06, and this time you enter your trade at 0.06. So if the trade goes wrong, it goes really hitting your SL even though it's 800 point, but the money that you lose for this trade will also be same, $50 only. So if this trade lost 500 point, you will lose $50. If this trade you also lost by 800, you will also lose $50. So meaning that you must control this 5% risk, because if you have a continuous of 2 trades, 3 trades are making loss, if you already lost 3 trades, each trade $50, you have 3 trade loss, so now you have already lost $150. By $1,000 capital minus your loss, you will still have a balance of 850 in your account, whereby you can recover back your previous losses. Rather than you doesn't control 5%, you make it a 20, 30, 50%. So by risking a higher percentage, that means you are lowering your total chance of trades. So now with 20 chance, I will say it's near to an impossible that you will lose 20 chance straight. Okay, from first until the 20th trade, loss, you lost everything. If this happen, then it's not about your money management. If this happen, it's all about your strategy. It's either you use the wrong strategy, or you know the strategy but you enter at the wrong, you didn't follow the indicators. Okay, the indicators doesn't show you the confirmation, but still you enter the trade. Okay, these are all the mistakes. So in the breakout strategy, the indicator must tell you the signal. If you don't get any signals, or the signal are just very nearly to the signal, don't trade. We must receive an exact signal, a confirmed signal, then only you can trade. Alright, so besides the strategy, the skills that you learn, money management also is a very important part in your Forex trading journey. Okay, so let's move on to the next video, which is the last topic of this whole course. We will talk about the risk management. See you in next video. Hi, in this video we'll talk about the basic news in trading. So what is Forex news? So it's actually referred to any news, economy data, or geopolitical events that have a potential to impact the Forex market. So since the forex market is a highly sensitive global development, so traders we always closely monitor the news event and to anticipate how they might influence our currency prices. So some news might affect on your market, and it will affect the price of the currency pair. So why we wanted to know about the news? So in this topic, it's not about how well you are in the world economy knowledge. Okay, just by using a website, there's a website you can always log on into, the www.forexfactory.com. Log in into this website. Secondly, at the menu bar on top, that's a calendar button. So click on the calendar button, and next on your right top, so you will see a filter button. Click on the filter button, and there comes out a box showing you the expected impact. So there are 4 colors here: red and orange, yellow and gray. So over here we do some filtration. You untick the orange and yellow. We just want to see the red and the gray. I will explain afterwards what is red and what is gray. Okay, so once you untick the both orange and yellow, just press on the apply filter button. There you go. So next, so what are the difference between these 4 different colors folder? So the red color folder is actually a major news. When it is a major news, these are the news event that will impact the market. And why we don't want to see the orange and the yellow folder is because these are just a minor news and it won't impact the market. Okay, and the gray color, it shows that the meaning is actually by bank holiday. So why we wanted to know on which particular country the banks are in a holiday. So every country, the holiday are different. So when you, for an example, when US is on a holiday, so we know that the banks in US are not operating on that day. So when you don't have the bank in the market, the fluctuation of the market can be affected by some speculator, which we wouldn't know who they are. So without the bank, so the best speculator will come and speculate the price, and we as a small trader in the market will get affected because you don't know. Either they want to speculate the market, push up the price, or they want to push down the price. We don't know. So if we trade during the bank holiday, you will see some abnormal market structure activity going on. You will think that, how come it suddenly shoot up, or how come it suddenly shoot down? But meanwhile, the banks is on holiday. So when banks on holiday, the price going and abnormal. So that means there are speculators in the market, and you don't trade at that time. Don't trade during bank holiday. Alright. So let's go to the next slide. So after do up all the filtration, now in our calendar, you only see red color folder, and if there's a bank holiday on that day, it will appear a gray color folder over there. So over here, as you can see on the right hand side, there's a time. There's a time, okay, shown. The time shown are based on your country's, your region time zone. If you are in the US, the time shows there, it will be your US time. If you are in the UK, the time show here is the UK time. Okay, then on the right hand side of the time is the currency. So that's mean, okay, over here, like as an example, let's look at this one. So for this one, meaning that at your time in Europe, there will be a news to be announced. So what is the news about? This is about the German flash manufacturing. Okay, so to know more about this news, if you are interested to know more, you can always click the folder beside. Over here you can read more about the news. Okay, clicking the folder, you have more information inside, and you can also read about some news posted by some expert to talk about this topic. Okay, and further on the right, we can see this row here is actually a row that will show the result for that news, the previous result. So as for this German flash manufacturing, the previous result is actually 43.2, and in the middle here is the forecast. So it's a forecast by the website. They are telling you that, hey, this time what we forecast is it will be 43.4, which is better than the previous. So at the end of the day, when the times come, the real actual result will appear here. Okay, so we don't need to know whether what is the result, whether it is good or it is bad. But what we want to take note is that we want to know that at what date, on which time, on which country has news event. Because why we want to know this? What to do if there is a news event coming up? Okay, first, when you have a news event coming up at your time, let's say 3:30 p.m. So you don't trade during that time or even 3 to 4 hours later in that time, because the news that which is impact the market will actually usually last for about 3 to 4 hours. Okay, so maybe during these 3 to 4 hours, just skip trading on that currency. Okay, so when you see there's a news happen in other country besides the USD, probably Australia, New Zealand, the GBP or the EUR, so yes, the price might be affect only the particular currency pairs, but whatever news that happens to the USD, the impact will be to all currencies. So be aware of this. Alright, so when the news come, avoid trade during that time. Secondly, any breakout because by the news impact might not be valid. So if let's say you have a support line over here, so when the news come, suddenly you see a candle break through the support line, but this breaking through is actually the effect from the news event. So this breakup, we don't take it as a valid breakup because it's just an impact by the news. Okay, so the third one, close any winning trade before the news if you have. So maybe today you already enter a trade by the breakout strategy, you already enter. So the moment you are waiting for the price to reach your TP, and when it comes to the second day, when you check on the website, oh gosh, there's a news coming in 3:30. So look back at your trade. If your trade has already making some profit, even though haven't reaching your TP, so if you don't want to take the risk, yes, you may close the trade manually. At least you have some winnings over there. But then for some other traders, when they have a trade before the news, but somehow they already set the stop loss and the TP. So they already have the mindset whereby if I lost this trade, this is how much that I will lose. I can take this loss, I can take this risk. So some traders, they won't close the trade. They will just leave the trade ongoing until the news, because we all don't know what the news impact will be. So if let's say this is a buy trade, when the news came and it will favorable to the market and the price shoot up, and it will immediately hit your TP. But also there's a possibility that the news came and it actually doesn't favor to the market, and the price will come down and hit your stop loss. But that's why I say every time remember to set your SL and TP whenever you enter a trade, because you might miss out the Forex calendar. You might don't know that there's a news coming up and you just forget to set your SL. But the moment the news came, the price shoot down and it will not hit your SL. It will keep on going down until your account, until the whole of your capital finish. So this is what we call a burst account. Alright, so if you can't take the risk, just close any trades before the news. So if you have any ongoing trade, make sure your SL and TP are set. So these are the things that you need to be aware. So that's why we always need to go back to this website and get yourself notice about which day, which time, when there's a news coming up. Just be aware. Alright, so yeah, this is all about the news. If for any one of you are into economy, you are very into all these news, yes, there's no harm. You can always follow news about the US economy. So what is US doing right now? Are USD upcoming are strong or weakening? What are the measurement for the US government or the US bank are going to take to solve some of the problems? So yeah, you can always go to the news and read about it. Alright, so that's about it for this chapter, and let's move on to next topic.